Well, welcome back. It is still News Up. Right about now, it's going to be our first conversation, which will be concerns around the non-oil sector. This is one sector that have recorded quite some impressive growth in the last few quarters. But then there is a perception that there are cracks within the non-oil sector, and if we must harness the potentials of the sector, the non-oil sector, it's important that we begin to look at this conversation and see how we can improve on the non-oil sector. Joining me right about now is Bamidele Ayemibo. He's an international business and trade finance expert. So good to have you on the show, Mr. Bamidele. Good morning.
Good morning. How are you today?
Very well, thank you. So good to have you talk to us this morning. Yes, the non-oil sector is big. It's really, really big. The last few weeks, the last few days, you can also attest, is the fact that there have been this huge conversation around improving trade within the sub-region, the African continent. A big conversation, Afrexim Bank-led conversation, the international intra-Africa trade conversation, and all of that. But we have seen non-oil sector in Nigeria appreciate in recent times. I don't know, let's take a holistic look at your perception of where we are with the non-oil sector in Nigeria.
The volume is growing little by little, and that's commendable. The only concern is I always ask the question if the growth is attributable to what we are doing, because when we are able to trace what we are doing to the growth, then it becomes a lot easier to continue to replicate and increase it. And the reason I say that is this. Given, for example, 2024 to 2025, there was an increase of over 20% in non-oil export from about $4.78 billion to about $5.4 billion. However, the major contributor to that growth is fertilizer export and cocoa beans export. But when you look at the fertilizer export, it was as a result of Dangote coming upstream, now exporting. And the cocoa beans export was because the cocoa beans price moved from about $3,000-$4,000 to about $7,000, in some cases $10,000, $11,000, $12,000 per metric ton. Now, these two products contributed significantly to the growth. Now, what that tells me is that it wasn't because of a strategy you implement. And by the way, the government is doing a lot, NEPC is doing a lot to support. But I'm trying to look at this particular growth. Is it because of those efforts being made? I don't think so. Now, and the reason this is important is it's important we do not celebrate an increase or growth that is not based on, that we cannot trace to our effort. Because when we can trace it, that's okay, look, what can we do? Can we scale what we are doing, increase it further so that we can do a lot more? That's the concern I'm having that I think needs to be addressed so we can grow trade in a traceable manner so that we can attribute the growth to effort being made and then be able to increase the volume by increasing whatever effort that is being made that we can see that is working within the sector. But no doubt there is growth, but what is attributed to the growth is the concern I have.
All right, Mr. Ayemibo, thank you once again for coming on the show, as always. I'm thinking, from what you have said, when government tries to create or provide an enabling environment and set up policies to ease of doing business and all that they do to create to support the business environment, isn't that also some deliberate effort to also boost non-oil trade? I mean, isn't that also part of it?
Very correct, very correct. But I'm talking specifically now for non-oil, but what you're saying is very correct. Those efforts, whatever government is doing, is correct. So let me give an example. NEPC, for example, is helping with quality issues, helping with certification and the like, which is good. But I've just told you by their own report, I'm trying to look at the implication of the report they gave themselves. So, but like you said, all the effort being made by the government that is contributing to growth of the sector, maybe infrastructure building. Like, for example, one of the things the government have done, and this happened even before this administration came in, that was at the twilight of Buhari administration, was fixing the port issue, which is commendable. I mean, I used to spend about 2 weeks before goods can leave the port, but now, in less than a week, I can get the shipment done. which is commendable. So I'm not disputing the fact that government is working, and that some of the results have been seen. I'm saying we need to.
Right, Bamidele, we just had a frozen signal there from our guests. We hope that we can reconnect and get Bamidele to let us understand what exactly he thinks that government is not doing. Or maybe he did say that, yes, government has done quite a few things. I would want to hear him tell us what government should be doing more.
Can you hear me?
Okay,
all right.
You're back. Are you back? We can hear you now. Yes,
yes.
We lost signal with you about 15 seconds ago. So you want to take it back for where you last said, talked about the fact that you said government is doing some things. However, let's take it up from there.
Yes, so I'm saying whatever government is doing, we need to grow trade and we need to grow it very fast. So we need to know what is working. I feel there are other things the government needs to do, which I'll talk about later on, that we're not doing. So, but what is being done, the result is not really what is creating the growth. So that means it's difficult for us to be able to sustain it because it's like the market forces or other decisions of the private sector. That is what is creating the growth we are seeing, not the direct effort of the government. That's the concern I have. And which is why I said we need to now look at what effort being made. For example, supporting SME in certification is good, but that is not what is growing the trade. So we need to ask ourselves, so we want to grow trade, right? We want to grow the non-export volume, right? So what do we need to be focusing on? What do we need to be doing? What kind of products should we be doing? What kind of agreement should we be signing? Those are the conversations I think we need to have so that we are very strategic in achieving our desired result.
And that is what we are doing right about now. That is the conversation we are having at this moment, Mr. Yemibo. Yes, I have been in series of seminars in the last few days where it's been huge conversation around improving trade within the continent, but importantly is the fact that how do we as a country build capacity to be able to compete and indeed be relevant in the whole AFCFTA conversation. What do you think should be our focus? I understand that it's also important that we begin to focus on particular products and all of that. Let me get your perspective. What should we as a country or as private sector players, as entrepreneurs, as SMEs, what should we be doing at this moment if we must improve trade? Sustainable fundamentals.
We need to increase the number of exporters in Nigeria. We need to increase that number. That must be a target for the government. That look, we currently, as of my last check, the government confirmed more than 15,000 businesses have registered to do export. But when you look at the data every year, the businesses doing export are not up to 10% of that number, like 1,200. That means there is a challenge. If you look at a lot of countries from the UK to the US, even in Africa, South Africa and the like, you have sometimes, some cases, 5,000, 10,000, 15,000, 20,000 businesses exporting. So what is happening in Nigeria is the major exporters who are doing millions of dollars per shipment and are doing several in a year are not doing new investment as it were. So if they are doing $10 million, $100 million, $200 million, apart from Dangote just coming in, that's what they've been doing for the last 5 years. Now, that means if we are going to increase the volume, we need new businesses to come in, both as SMEs and also as large corporate or multinational, so that when we have new businesses coming in, bringing in new investment, we can increase the volume that we are doing. So any activity we are doing, in addition to whatever activity we are doing, rather, we must be strategic in increasing the number of exporters in Nigeria. If we have 15 businesses registered, 15,000, over 15,000 registered, and we have just less than 1,500 that are able to export, that speaks to the challenge of export readiness. Export readiness. That means we must do readiness assessment, capacity building, and relevant support services to get the number of exporters to increase. And then it must include incentive on the part of the government also. Because if I'm a manufacturer, Nigeria is a large market, and I'm already doing well in Nigeria, I'm selling in Nigeria, I'm okay. However, if you want me to now export under AFCFTA, there must be incentive, for example. And I must commend the Minister of Trade doing something in this regard, because recently there's an agreement with Ugandan Air to be able to help move goods to East and Southern Africa, and with a discount on the freight charge. And the reason is because the cost of moving goods in Africa is very high because our connectivity is not very good. In fact, if I'm shipping goods to Ghana, for some vessels, they'll first of all go to Morocco, go to Europe, and then come back because the number of shipments, the container leaving Nigeria to other African countries is very, very low, which is why you see the report of the fact that a lot of containers leaving Nigeria are empty containers, because there are more empty containers leaving than the one coming, because we are not doing as much shipment as we should do. So we need to increase the number of exporters, support the businesses to be able to, and incentivize people to want to do it.
Let me also take you on your assessment on the programs that government has put in place to support businesses, because again, the production that we're talking about has to come from the private sector largely, and of course government will also do theirs. What's your assessment of the types of programs that is currently in place to support production, to support businesses?
In terms of production, I can't see a lot within that space. In terms, for example, we see a lot of issue with agri. So for example, if you want to do production, and this is very interesting. I think it was Donald Duke that did the cultivation of cocoa beans many years ago in Cross River. Now it's been over 10 years that he's left that office. Cross River is now a major producer of cocoa beans next to Ondo State in Nigeria. Why? Because one man had a vision and decided to leverage on that and cultivate massive land for cocoa beans. That is what we need to do for other commodities that can serve as raw material for our factories and at the same time commodity we can export. So in terms of boosting production, I can't see a lot in that regard. In fact, there are challenges for farmers sometimes to even get land because they need a lot of investment to clear those land, which is where Bank of Agriculture come in. Agriculture it's over ₦1 trillion that they're giving to them now. If that money is released to them and is being well utilized, maybe we can begin to see a lot within that space. But for now, we are not increasing our production. I mean, we can do a lot more. And what's interesting about Nigeria is the fact that most of our farmers are peasants. We've not used up to half of our arable land. We have 30 to 50% post-harvest losses. We largely farm during rainy season. Despite this shortcoming, Nigeria is still the largest producer, among the 20 largest producers of most exportable commodity in the world, including the fact that we have issue with security challenge. That means if we can fix those problems and boost production, we will be able to grow export significantly. By the way, Netherlands is generating a lot of money from commodity exports. So those, even as much as we even want to do value addition, but we can still do a lot with commodity also. That means we should do both. Where we're exporting commodity, the way the US and Brazil and Netherlands will do, we are also adding value to it to be able to maximize the opportunity within the space. So government is another area that I think we need to improve is financing. Now, in fact, if the government needs to do anything right now about production, it's financing, because it's challenging for a lot of businesses right now to be able to get loan from bank at almost 30%, in some cases more than 30%. How do you produce? How do you even get the profit? How much are you even making to do 30%? Now, this is where in many countries you have export credit agency. In Nigeria, we have the what you call the Nexim Bank. But do you know that Nexim Bank today in Nigeria does not have a board that can approve large amount of money? If you need about 500 to 1 billion naira in terms of loan from Nexim, they won't be able to do it. In fact, creatively, the MD is trying to go to the Minister of Finance to get approval because the board that's supposed to approve have not been constituted. These are signs that show that, look, are we even really serious about growing non-oil export? Should we even have, do you know the interesting thing about that board? Statutorily, they have people from CBN, Ministry of Finance that will be there, but it's the politician that's supposed to be part of that team that has not been added to be able to inaugurate and consider that board. And that's an organization that can give single-digit loan or very low-interest loan for production for export. But
all right, Mr. Yemibo. Yeah, Mr. Yemibo, earlier you talked about the fact that we Nigerians are not export ready. You expressed concerns around export readiness. So let's break this down into perspective. Let's look at export readiness from the side of the entrepreneurs or the small and medium scale players, and let's look at export readiness from the side of government. I want you to attack this from this perspective.
Okay, let me define that word export readiness. It's a multifaceted concept that involves the ability of a company to successfully enter the export market, sustainably compete in the market, and significantly grow its market share until it becomes established in the market. Now, by that definition, many businesses have issues entering the market. Now, what the government needs to do is to conduct export readiness assessment. As a matter of fact, if you want to come into export space and you are new, if you're already exporting, you can easily get to renew your export certificate. But if you are new from the government perspective, the government needs to conduct export readiness assessment. If you have found one thing, the government then should help you to cover the gap with capacity building. And they must ensure that you have covered that gap before you get the certificate, so that anybody that gets the certificate, because we have over 15,000 people that have gotten it, but not many of them are export ready, because it's easy to get, which is good. The government make it easy to get. Only that we are giving a certificate, but we are not assessing, are these people really ready? The promoter needs to be ready. That's the owner of the business to be ready. The product needs to be ready for the export market. The pricing to be sold needs to be ready for the export market. The staff position, the reason for going global, the production capacity, being able to source for funding, payment. They also, in terms of skill, even understanding the buyers in the export market, understanding the paperwork, the documentation involved in export, understanding the potential market. All these are different areas of readiness that need to be assessed, so that we can be able to know that, okay, this company is ready and it can go, or it's not ready. Let's support them with necessary support services, necessary coaching, necessary mentoring to be able to get them ready and be able to increase the number of exporters that are ready for export, and then grow the number of export volume from Nigeria.
Thank you very much. Let me also ask you, President Bola Tinubu has been traveling to some places in recent months. And what we're told is that some of these places that he's traveled to, they signed some bilateral agreements. They also signed some kinds of understanding to do business across the various countries. Do you think that we're making as much impact as we should, or getting the right benefit from some of these agreements and engagements that the president is having across the world?
We go and sign those agreements sometimes, and then nothing happens afterwards, or to be able to assess those opportunities, some people will corner it. And at the end of the day, not everybody is able to assess it. But in my opinion, here is the agreement I think Nigeria needs to sign. Agreement with a company, with government of China, for example, that we have given a lot of business opportunity by bringing infrastructure in Nigeria and saying, look, you are the largest importer of soya beans in the world. Soya beans global demand is almost $100 billion. Nigeria is an exporter of soya beans. Can you give us 5% of that market? You buy about $60 billion. Give us $5 billion. Give us $10 billion of that market. We will give you infrastructure to build in Nigeria. Give us that billion of that market. And then government, through the Bank of Agriculture, NISAL, and NEPC, engage farmers to be able to massively produce soya beans, process it, clean it, bag it, and ship it to China. And government can make money directly from that. It can bring a lot of forex. That's the kind of agreement I'm expecting if we're going to go trade. Look for products that have huge volume, huge demand, that Nigeria have an advantage in being able to produce competitively. Sign an agreement with those countries to be able to get them to buy from us as one of their partners, while we also give them opportunity to be able to do business in Nigeria. That kind of symbiotic relationship can significantly help us grow trade. As it is right now, I'm not privy to some of those agreements. I don't know the basis for it, but what I know for a fact is that when some of the agreement is signed, not many people are able to take advantage of it.
Look at the place of multilateral agencies, donors, talking about in terms of providing finance for the non-oil sector players. I mean, I know the Bank of Industry. I know the other one, Afri-Exim Bank. I also know that Nexim Bank is also doing so much. Is it that it is not enough, or Nigerians are not taking advantage of these opportunities presented to them by these agencies?
The agencies are handicapped. Let me use Nexim as an example. Nexim need to do a program called export credit insurance. You know, with the issue between Trump and China, China is looking for a new market, and China is mandating the different provinces to engage their manufacturers to look for new market and to protect the risk of those new markets with an export credit insurance. That means if they go into that market and they have issue with their payment after shipment, government will pay them and government will go and sort out those issues. That's the kind of support that Nexim have. But Nexim does not have all the funding required because they need reinsurance that will be able to also give them guarantee to ensure these funds are made available whenever there's a call on those insurance instruments. So we need an export credit insurance, but Nexim is not able to do it because Nexim doesn't have enough funding. So Nexim need more funding. Nexim board need to be constituted. Nexim is doing a lot. Sincerely, I must give it to them. Even given the circumstances they find themselves and how creative the MD and the ED has been to be able to get things done in spite of the challenges they have. But they need more support. They need more funding. They need to constitute their board, and they need to come up with new products that will encourage people to want to go into export. For BOI, BOI is trying also. BOI basically deal with financing machineries, and I know a lot of people they are financing. The only challenge I have with some of these agencies also is they are government agency, right? They are supposed to also share risk. They don't share risk at all, and that's not nice. A number of export credit agencies around the world, they share risk with the exporter, with the bank. That means, because sometimes some banks don't want to use them because banks carry all the risk, they don't carry any risk, even though they make the fund available. What that means is that if anything goes wrong, banks bear the brunt. But some banks don't even want that. Banks say, I'm carrying the risk, but we're sharing the profit. Why, if we're going to share the profit or share the interest, and why can't we carry the risk together? So they need to, but they can't do that if they don't have enough funding to be able to protect themselves when there are issues. So capital adequacy become a lot more important. So need for funding of these agencies, and at the same time for them to be able to share risk and increase their risk appetite. But more importantly, also is to ensure they function properly by constituting their boards.
Right, thank you. So we keep talking about diversifying Nigeria's economy, and one of it is, you know, the trade that we're talking about today. And I've heard you talk about exporting certain food items. The question would be, Nigeria isn't even, you know, food sufficient. You know, when we talk about food sufficiency or food security, is this something we're dealing with within? Some people will then look at you and say, wait a minute, what about Nigerians in Nigeria? And the market is huge, well over 200 million as well. And so why are we bothering ourselves so much, you know, apart from Forex, you know? But how about ensuring also that we take advantage of the markets here in Nigeria?
We need to do both. But when you look at the major item of export from Nigeria, they are not the what we eat regularly. Cocoa beans, cashew nuts, ginger, sesame seed, gum arabic. Now, these are products that we don't even use as such in Nigeria. We process them, maybe to some extent, but we don't do it as much. So we are not even able to consume, because when we consume more, cassava-based food, yam-based food, cereals like rice, corn, sorghum, and that's why government prohibit the export of corn, because we have a lot of corn-based food. Government prohibit the export of corn. You can only export processed corn, maybe into pap or other products. You can't export it in the raw form. And rice. So when people talk about this, a number of the products, those are not what we eat regularly. How many people take beverages? How many people have the money for it? But even though we process it, I mean, we have enough processing cocoa, processing cashew. We process it locally, but we cannot consume all the raw material because they are raw material for those factories and we can't consume them. But for the one that we need seriously, government is not even allowing some of them to go out, and a good example will be corn.
So let's look at, I mean, my colleague did ask you, why should we be looking outward? Of course, you did say we should do both. So I'm also staying with the intra Africa trade, which is the biggest conversation right now going on around trade. We have seen some new initiatives which revolves around eliminating exchange rate differences. We saw the launch of the PAP system, which of course eliminates the differences in currencies. Help me understand how you think this could indeed help build the intra-Africa trade.
Okay, so two major issues I see, apart from internal, two major issues I see that affect everybody within Africa or intra-African trade: currency, payment issue, and logistics. Payment issue has been fixed, logistics has not been fixed, even though it's been worked on, which is why the minister recently had to other partnership that enable this, giving a discount for shipment by air for goods out of Nigeria. But shipment by air in the world is just about 10% or even less than 10%. More than 80% of shipment in the world is actually by sea. Sea constitutes largely most shipments, some by road, some by rail, but mainly by sea. So we need to fix the sea shipment. Intra-African trade is a big opportunity. My concern is, are we going to be able to leverage it? You know, we had AGOA that did not go well. We didn't do well with AGOA. We already have one within West Africa called ECOWAS Trade Liberalization Scheme, ETLS, which we are now also doing very well in. If we don't solve the problem we have with AGOA, which is issue of export readiness, if we don't solve the problem we have with what's the name, with ETLS, which is also issue of export readiness, among other things, including logistics, then we will have the same issue under AFCFTA. PAPS is working. A number of Nigerian banks are already on PAP. People can now import into Nigeria from Africa and pay in Naira rather than pay in dollars, and they can export from Nigeria and pay and receive Naira instead of receiving dollar. That is on, but we are not still leveraging on it as much as we should, because the cost of moving goods within Africa is a big challenge, which is why the subsidy being given with the discount by air is necessary. Now, there is this Sea-Link project within West Africa, Central Africa, Southern Africa that is being funded by Nexim plus private sector and even supported by Afrexim. Those are the conversations we need to be having right now. What is delaying that particular project? I keep asking anytime I meet Nexim staff, they say they are working on it. The idea is to have a vessel that will traverse West, Central, and Southern Africa. That is too slow. This has been on even before COVID. And it's been 5 years, the vessel is still not, they've not started working.
Just before we let you go, let me ask you concerning the private sector, because again, when you look at the economy, I mean, the major drivers actually are those of you in the private sector. Funding, for example, you've talked about access to funding as part of the challenges, but I've also listened to some agencies who say sometimes, the other day we had someone here who said, look, sometimes they find it difficult to even find people who come forward to access some of those funding that government has provided. And then you begin to wonder, and then we keep complaining about access to funding. And here we're told that quite a number of those programs that government has put in place, it's difficult to find people come around to try to access them.
You know, the challenge in Nigeria sometimes is government come up with an initiative, but they don't promote it. There are a lot of things government have in place to support businesses that many businesses are not aware. For example, if I'm a farmer in Nigeria, I can take a loan from bank and get an agency of government to guarantee the loan and reduce my interest rate and reduce the requirement for me to be able to do that farming. But you know what? When I go to events and I mention, say, you mean government is doing this? So I always ask them, why don't you promote your activity? Maybe there's no budget. There's no budget for promotion. Now, that's one reason why it's not being assessed. Number two, for funding, sometimes the requirement also is challenging. Why will I be taking loan from government and getting the exact requirement as expected by the private sector, by the banks? So sometimes I want to take a loan from Nexim Bank. What I will be providing is like I'm taking a loan from a commercial bank. And the idea is this government agency or government export credit agency are supposed to be providing facility, but with a more lenient, not to be reckless in funding, but also need to be lenient in the way they go about it. And the reason for that is it helps them to be able to support businesses. support businesses who are not having the capacity to be able to meet up with the requirement that they would typically use. So if you're asking me what I don't have, then I won't be able to access the facility. And that's one of the reasons why they are not able to access it, apart from the promotion I mentioned earlier.